Well, it was an interesting thing to wake up to on Saturday morning. This America First investment policy hit the wires after the U.S. close. Um, I sort of took the time to kind of think about it a bit, instead of knee-jerk react to it. But I'm not sure in the longer term it actually makes a great deal of difference. I mean, if you think about Chinese investment activity within the US, there's not a lot of that going on, although there hasn't been a great deal of that going on in the last few years. In terms of US institutional and other investment in China or other FDI, there's certainly not much going the other way. If you look on the financial asset side specifically, U.S. institutions have been underweight Chinese equities and Chinese financial assets really for the last 3 or 4 years. If you look at the short interest in the main U.S. listed China ETFs, that's the MSCI iShares, FXI, and KWEB, the Crane Shares one for tech. Short interest levels in those ETFs are actually higher than the long-term sort of 3 to 5 year average right now. So I'm not really worried too much about this. We might see a bit of a hiccup this week, but I think the future for Chinese equities really wasn't relying on the American investor coming back to that market. I think it is much more a story about domestic investment, if you like, the increasing acceptance by Chinese savers of equities as a unit of savings, as opposed to property and then last year fixed income. They've clearly had a green light from Beijing that the water's safe in the equity market. And I'm certainly very excited at a time when Chinese equities look as cheap as they ever have. Balance sheets are in rude health, I think the consumption story is just about to really take effect.
Yeah, I just want to understand how much you believe that this sort of tech and AI optimism and enthusiasm has legs. I like your title of your latest report, Hot for Hot Pot. You've sort of broken down how you view the Chinese market through that lens, but I'm just wondering, with everything in mind and, void of a Trump-Xi summit where hopefully they can hammer out some negotiations and come to some sort of constructive path with this relationship, then is the AI momentum here going to be enough to offset the uncertainties around tariffs and investments?
Well, I think there are two different stories here. I think that the DeepSeek moment was a fantastic wake-up call that China's actually pretty good at engineering, and there's been so much sort of Silicon Valley-centric thinking around the whole AI story, and assuming that semiconductor export restrictions would keep China permanently behind on that front, and that clearly looks as though it's not the case. In terms of the bigger sort of geopolitical issue, if there is some kind of multipolar world grand bargain that's likely to come from a Xi-Trump summit, well, that kind of automatically removes the big risk factor that's been hanging over Chinese equities as an asset class of the last since Russia's invasion of Ukraine, which is could Chinese equities go the way of Russian equities, in terms of being cancelled from people's ledgers down the line? Could they be? People use the expression, could they be Gazpromed? I think if you are looking at some kind of grand bargain, well, that's incredibly bullish in terms of the removal of a black swan for Chinese risk assets.